स्मार्ट इन्वेस्टमेंट से रिलेटेड वीडियोस के लिए सब्सक्राइब करें टाइम टू इन्वेस्ट चैनल को और प्रेस करें बेल आइकन ताकि आपको मिलते रहें बेस्ट एंड एक्सक्लूसिव वीडियो म्यूचुअल फंड, स्टॉक मार्केट और इन्वेस्टमेंट पर। Hello friends and welcome to Time to Invest. Today in this video we are going to do a complete fund analysis of Axis Bluechip Fund, which is a top performing mutual fund in large cap category. So let's begin the fund review. To become a smart investor, read our Investment Yearbook 2018-19 revised edition and give your investment a right start. To order your copy, kindly click on the link given in description, available on Amazon. So friends, let's begin the fund review of Axis Bluechip Fund. First topic which we are going to cover is fund overview. This fund belongs to one of India's biggest fund house, that is Axis Mutual Fund. It is a large cap category open-ended growth scheme. The scheme was launched on 5th Jan 2010. It is a 8-year-old fund, which means that this fund has the maximum market cycle experience since 2010. The asset under management for this fund is more than 1700 crores. Nifty 50 is the benchmark for this fund, and to invest in this fund you are required a minimum lump sum amount of rupees 5000, and to start SIP you are required an amount of rupees 1000. The next topic which we are going to cover is fund return analysis. The return analysis speaks about the fund's manager performance and capabilities. In return analysis, first we are going to compare calendar year returns with the benchmark returns and also look at the number of times the fund has generated alpha for their mutual fund investors. By alpha we mean that how many times the fund has given returns more than the expected returns. In calendar year returns we can see that from year 2011 till date the fund has consistently beaten its benchmark and generated very good returns for their mutual fund investors. Here it is evident that in year 2012 the fund has given a return of 31.73%. In year 2014 the returns are 40.85%. and year 2017 it has given a return of 38.03%, and only in year 2016 the fund was not able to beat its benchmark with a margin of minus 7.22%. The next topic which we will see is compounded return or the CGR return. In first, second and fifth year the fund has beaten its benchmark CGR return. Third year, when its benchmark CGR return was 9.6%, the fund return was 0.71% higher, that is 9.77%. And in fifth year it was 1.82% higher than its benchmark, that is 13.27%. So friends, it is clear that for better returns in mutual fund we have to stay invested for longer period of time, at least for 5 years and more, to grow our wealth. Now we will compare the fund return with average category return, and here we can clearly see that fund has beaten its category average return in every consecutive year. In first year it has beaten its benchmark with 10%, second year 8.3%, third year 3.2%, and in fifth year it has beaten its category average return with a margin of 1.4%. So we can clearly see that it has always performed better than its category average return. Now we will consider the case of best of category return, and here we can clearly see that this fund has consistently performed on par with its best of category return. This fund has given a decent return of 12.92% since inception, which means that the investment of 1 lakh at time of inception would have become 2.64 lakh till now. The next topic which we are going to analyze is fund's best and worst returns. When we consider fund's worst return, we can see that from June 2011 to December 2011, the fund has given negative return of minus 16.48%, whereas the benchmark was minus 18.12%. And from January 2011 till January 2012, the fund's benchmark has given a negative return of minus 24.42%, whereas the fund's negative return was minus 22.21%. We can see that in both the cases the fund has beaten its benchmark in worst case scenario. Now we will compare the best return for this fund. From March 2014 till September 2014, the fund has given a return of 34.13%, which is 3.7% more than its benchmark return. In second case, we can see that from January 2014 till January 2015, the fund benchmark has given a return of 45.51%, whereas the fund has given a return of 54.97%, which is 9.46% higher than its benchmark. By this analysis, we can clearly make out that the fund has given more returns in bull market and 10 less in bear market than its benchmark. And from this entire case study, one more important point which we can observe is during the period of January 2011 till January 2012, when the market and the mutual fund both fell more than 20%, we can see that just after that, when the market started to recover in 2014 and 15, market and mutual funds has given a return of more than 40%. So friends, as a smart investor, during the time of market fall, one must not stop their SIP and investment. In fact, these falls are the golden chance which a smart mutual fund investor can use to buy more number of units at lower price and can earn a better return by selling them in bull market when your financial goal is reached. Because greater the number of NAV, greater the amount of profit. Now let's look at the fund's performance chart, where blue line is representing fund's performance and the grey line is representing benchmark performance. And it is very clear from this graph that fund has outperformed the benchmark. The next topic which we are going to cover is risk analysis for this fund. Mutual fund investment are subjected to market risk. Friends, we all have heard this common line in every mutual fund ad, which means that equity mutual funds carry certain type of risk, which are sector exposure risk, stock exposure risk, business risk, valuation risk, liquidity risk, and etc. And to analyze this risk, we use the measures such as alpha, which indicates how much more returns a fund has generated over its expectation. Here in this fund, the alpha is positive 1.83, which is better than its benchmark. Second one is beta, needs to be smaller than or equal to 1, which is better for the fund. This fund's beta is 0.88. Third is R square, it should be near to 100. This fund's R square is 88.56. Fourth one is Sharpe ratio. This fund's Sharpe ratio is 0.64, which is better than its benchmark. Fifth one is standard deviation, which shows the volatility of the fund, and the lesser the standard deviation, it is good for the fund. This fund's standard deviation is less than its benchmark, and thus it is less volatile. Upside capture ratio, it should be more than 100. But this fund's is 87, on par with benchmark. Downside capture ratio, which must be less than 100. And again, in this fund, downside capture is on par with its benchmark, that is 83. Maximum drawdown percent, which tells us the peak decline of this fund during a specific period of time. This fund's maximum drawdown is minus 12.57%, which is 1.23% less than its benchmark. Based on the above parameters, we can look at the fund's risk versus return matrix, and from the fund's risk versus return matrix, we can see that this fund is taking low risk to deliver above average return. Now we will look at the product positioning graph. From this, we can easily understand that large cap mutual funds are less riskier than other equity mutual funds, and also an important part of core portfolio of mutual fund investors. And now in next part, we will look at the fund's portfolio analysis, which helps us in predicting future performance of the fund. The first topic in this section is the fund's objective. And this fund's primary objective is to achieve capital growth over a long period of time by allocating in equity diversified in different sectors. Up next is investment style, which tells us about the kind of stocks mutual fund invest in, which is divided into growth stocks, blend stocks, and value stocks. These funds generally invest in growth stocks. And now, by looking at the entire portfolio of this fund, we can see that the fund's major allocation is in the top performing stocks. You can look at the entire chart. The next, we will see the sector allocation for this fund. Here we can see that the major allocation is done in banking financial sector, information technology sector, and automobile sector. And even then the fund's portfolio is diversified in different sectors also. The next we will see the portfolio valuation and expense ratio. This fund's PE ratio is 33.44 and PB ratio is 5.71.
which indicates that this fund is available at very attractive valuations. Currently, 84.71% of investment in this fund is allocated to equity, in which 39% of stocks are overvalued, 38% of stocks are fairly valued, and 4% of stocks are undervalued, and 83% of stocks are large cap stocks. The expense ratio for this fund's regular plan is 2.52% and direct plan is 0.92%. So it is advisable for all the mutual fund investors to go for direct plans for lesser expense ratio. In the next section, we will know about the fund manager details. This fund is managed by Shresh Devilkar and he has experience of more than 7 years in equity market. At present, he is successfully managing 3 mutual funds including this scheme. Finally, we come to the conclusion of this review. This fund picks up fundamentally strong stocks, and the aim of this fund is to outperform benchmark at lower risk.
After doing the complete analysis of this fund, Time to Invest gives 4 stars to Axis Bluechip Fund. Friends, thank you all for giving your support and precious time. And on behalf of Time to Invest, I promise you all to bring such informative videos in future which will help you invest smartly. Dear viewers, Time to Invest has launched Investment Yearbook Revised Edition 2018 and 19, which is available in English and Hindi. It will not only help you in financial planning and investment planning, but also in tax saving. Read these books and provide your valuable feedbacks. And don't forget to encourage your family members to learn about investing. If you find this video helpful, please don't forget to press like button and subscribe and share this video. I will keep bringing such kind of videos in future which will help you in investing. Thank you and happy investing.